It's not the first time you've heard me talk about the bonds and the yields. But when you start seeing articles from heavyweights on Wall Street, they are starting to address their concerns about the game of investing. The main problem right now in the marketplace is the bonds are crashing. The yields are at 20-year highs. We need a crash to save the market. And in today's live stream, ladies and gentlemen, I'm going to break it all down for you. I'm just checking if the microphone is on. Let's get with the flavor, ladies and gentlemen. All right, gang. Are we good? Hold on. Yeah, that's on. Everything's on. Looks like everything's working on my end. Are we well, chat? Are we good? Looking at the chat itself, looks like you guys have been having a little bit of fun in here. Slacker, what is happening? Helen, Victoria, mad love to everyone passing through. Now we've got ourselves a bit of a story. 207,000 claiming benefit. Less than what they had projected. They expected it to be more. And this is the problem that we are going to have. If people are not out of work, then the marketplace is going to struggle. Why? Because this here is an example of what could increase inflation. Now, don't get it twisted, ladies and gentlemen. Next week, we got CPI data coming out, and that's going to be the deciding factor. But this Friday or tomorrow will be the nail in the coffin, which is why this is my warning to you. If the non-farm payrolls comes in and shows that more people are in work, we're going to have a bit of a problem. Check this out. Barclays. Look at this article here. Only equities crash can rescue the bond market. Right now in the bonds market, if we go over to the bonds market, you can see bright as day. Look, it's not looking good, okay? It's dropping. Investors are not seeking fixed income investments. This is a fixed income, okay? This is where the problem lies. If investors aren't coming to the bonds, the yields are going to keep going up. Now, word on the street says that the 10-year yield could actually go to 5%. Look at it, man. This is not sustainable in this marketplace, which means the higher the yields go, the harder it's going to be for banks. Already, the NASDAQ, the S&P, stocks are too expensive right now. It has to crash. Now, some of you might be like, yo, Tina, man, I don't like you anymore, bro. You used to be the guy that was, yeah, rise, retrace, continuation to the upstart, whatever. But unless you understand what money's doing, remember, Bitcoin's rally in the last move or the bull run was because of the stock market. I don't care what anybody says. Everyone was in a mood for buying. We didn't have a problem with the yields. We just come out of COVID. The market took a slump and then they just went for it. Money was cheap. Now money isn't cheap, okay? A sell-off in global bond markets has pushed borrowing costs to their highest levels in more than a decade or so. That's a problem for banks. So we know that if banks ain't making money, no one's making money. You only have to go and have a look at Goldman Sachs. Look at this bad boy. This thing slumped down minus 4.63%. That's not looking good for Goldman Sachs. What's it going to say to its investors? Don't worry. You know, things are all good. This is just Goldman Sachs. We got HSBC. Look at HSBC right now, coming back down, okay? They're all in a base, but they're going to feel the pain. And this jobs data that comes out on Friday is going to be the nail in the coffin. An article that goes like this says the following. Friday's payrolls will decide. Where are we? Here we go. Friday's payrolls data and next week's inflation number will decide whether the 10-year Treasury yield goes to 5% or down to 4.5%, okay? A higher than forecast jobs number could trigger another wave of dollar buying and bond selling. So let's go back straight to the dollar. What do we have? That's an interesting thing, isn't it? Another wave of dollar buying. Let's zoom in and have a look at dollar, right? We just had the data that come out. Euro makes a move up, comes straight back down, trying to make a little bit of a recovery back up right now. But we're going to have a little bit of sideways price action because tomorrow's data is a big one, okay? Now, I'm going to say it. Is dollar leaving clues behind? Because even if, right, the data comes out tomorrow and shows that there are less people working, the Fed is still going to be making its decision in November about another rate hike. Whether they hold the rates or not, the jobs data hasn't been consistent. Like I've been saying, you had 9.61 million on JOLTS job openings, 89,000 less than what they projected on the non-farm employment change, okay? If this data comes in tomorrow and shows more people are in work and it hits above expectations of 171,000, wow, then dollar, ladies and gentlemen, will like to make a nice little trip back up towards the 106,800 zone with the potential of clearing this range and going for 107. Again, the dollar is where it's at right now, which means it's going to be hard for Bitcoin to keep moving up. Okay? Now, nice little play up, moves back down. But we did say that Bitcoin does have the capacity to get and mix, or should I say, get into bed with conventional split on investment portfolio management. What do I mean? Well, institutional fund managers, they split their portfolios like this. 60% stocks, 40% bonds. If Bitcoin can take 1% of that, then happy days. Bitcoin will fly out. Why? Because then investors will be seeking it as a hedge. They'll be able to exploit it, all right? But the marketplace itself, it's not ready for it yet, okay? That's the problem that we've got. Now, when we dive into the price action very, very shortly, guys, we have to get it in our minds that if the market doesn't crash, investors aren't going to go to the bonds. That's why even foreign investors in Japan, they're not going to come to the US anymore. Well, why not? Well, I'll tell you why. Because if the United States bonds are dropping because no one's buying them, why on earth would Japan step in and start buying them? So what does that mean? Well, it means that the government now has to offer higher yields, okay? So they're going to push the yields up to encourage investors to step in. But given that Japan is changing its fiscal policy, Japanese investors are going to end up staying in-house. That means they're only going to be buying domestic bonds because the yields are going up in Japan. That's what the plan is, to get the yields up to encourage investors to deposit money with the Japanese government. Excuse me, which means that the US markets, it's not going to be good for them. If the 10-year yields go towards the 5% mark, okay, then we've got a problem. That's the thing. And if the NASDAQ does not continue to drop to the downside, we're going to have a problem. Because where do you think they're putting their money? They're just going into the stock market. They're not seeking fixed investments. They're not seeking fixed income. When something is fixed for a period of time, it means that you have confidence of locking your money up for a longer period of time. That's why we have, again, the yield inversions. You get 5% on the 2-year, and then you get 4.7% on the 10-year. Okay? That can't happen in a sustained marketplace. All right? With just that understanding by itself, that's going to help you work out what's going to be happening with assets across the board. The market is stubborn, okay? If we go over to look at what's going on in the marketplace, you can see from yesterday's close, because the market's not fully open yet. Yesterday's close, there were stocks, 283 stocks up on volume, but 236 stocks down on volume, okay? That's a problem. We need more stocks breaking out. And we need more stocks near a pivot point, which could suggest that they're getting ready to move up. Okay? We're not getting that yet. That's a problem. All right? We go into the NASDAQ itself and we can have a look and see where we are in terms of distribution days. And you can see on the daily chart itself that we had nearly a distribution day yesterday. Okay? Going on to the 10th. All right, where are we at now? No. The 3rd. There was nearly a distribution day on that day. Okay? but it didn't really come in as heavy selling. But it's starting to mount up, and price is starting to turn on the NASDAQ. The thing is, we're waiting for the bonds market to start encouraging investors to get in on the cheap. Go back into the bonds market and then say to yourself, right, if they're not buying US bonds, that means government debt, okay? The treasuries as such. What are they doing? They're stacking it in dollar, all right? Now, dollar, 6-hour chart, it's going up. Euro, poor thing, it's coming down. It's in a trend down. Now, we've got other areas in the euro, and word on the street says that it could be coming close to parity again, back to that 1-for-1. That would be the nail in the coffin for the euro, in my opinion. Could it go any lower than that? Well, there is a green vector candle at 95. That would be a very big problem. That would mean dollar dominance itself will start hitting the 115s, 120s even. I'm not even going to talk about the Japanese yen. Well, dollar yen itself could be going again over towards the 150 mark, because once 150 was hit, Japan stepped in. All right. So hopefully we see dollar yen come down, but they're holding out in dollar yen, man. They're holding out. OK, so with that being said, you've got a good idea of what to expect in terms of the data going into tomorrow. Anyone that's holding Bitcoin right now, any volatility to the upside, just capitalize on it. Take some money off the table. OK, because it's going to be soon when the markets actually filter the idea that the bonds aren't being picked up. And that means investors are seeking safety of cash, and the yields are going up so high that they're not going to be sustainable. How's the US with a debt problem going to sustain a 5% on the 10-year? What would that put the 2-year at? 5.7? 6 even, maybe? Who knows? Couple of big boys in Barclays have turned around and said that, yeah, maybe a 6% on the yields is decent. It's all right. 6% on the yields, brother. Are you mad? That means investors aren't picking up bonds. Government's trying to advertise it. All right? When you understand that, you have a little bit more confidence in how long you're going to be holding your positions in Bitcoin for. Okay? So what have we got Bitcoin doing now? Well, Bitcoin looks like it's trying to produce a fade into the rally. All right? When we look at Bitcoin on the higher time frame, we put things into perspective and we say, okay, well, where's Bitcoin at? Well, that's where Bitcoin's at. Is it showing positive price action? Well, it's just going sideways. And quite frankly, Bitcoin could stay sideways, okay? We've got a green vector candle down here. Bitcoin could come and attack that region. This is on the daily, remember. Could come and eat this liquidity, come back up again, go back into red vectors. It could actually do that. That will then prove Bitcoin is the hedge against inflation. Indefinite. Because look at all the news that's coming out. When you see big drops in Bitcoin, yet it still sustains and holds these ranges, you're going to be saying to yourself, right, okay, Bitcoin could be the store of value, and that could encourage investors to step in and be like, you know, we might actually hold out on Bitcoin. So they won't allow it to go too far up, and they won't allow it to go too far down until the marketplace does decide to say, you know what, it's bullish mode. It's now time to buy. We haven't had the correction, ladies and gentlemen. I'm sorry, okay? And that's not me being negative. That's me putting things into perspective for you. They haven't done it yet. Equities are too high. The value of equities is too much right now. Too much money is locked into these bad boys, all right? It stinks. I would prefer a 3-4 or even 3-6. Let's be conservative here. A 3-6 on the S&P. That's what I would want. The only way that would be invalidated is if they actually break out and go to 5,000. Okay? That would be unprecedented. That'll be crazy. That will take all economic theories that have been used over the past 100 years to forecast recessions, inflations, okay? Jobs data, anything that has been used from an economical standpoint or theoretical, okay? It will completely wipe it off the board. There'd be no use for it. Because the bonds market is not suggesting that now's the time to buy. Because if they're not locking their money for longer periods of time, what are they doing? Fast in, fast out, ladies and gentlemen. Get their money in goods, sell into retail, drop it back down again. That's the truth. And we can see that from the bonds and the yield markets. All right? Remember, you guys are focusing on cryptocurrencies, $1 trillion market cap. Ooh. Bonds market is 100 trillion. If any of that is going to go into Bitcoin, you want to focus on that market. If they're buying bonds, they're buying Bitcoin. All right? So, back into BTC. Daily time frame. Let's have a look at the levels that Bitcoin could be showing promise to. All right? Any move up right now, okay, from now until tomorrow could be compromised at the call of the non-farm payrolls, okay? So if you're exploiting certain plays right now, make sure you're taking money off the table. Euro's coming down, okay? NASDAQ and S&P, they just rejected the VWAP. So we're going to get into a little bit of price action right now, ladies and gentlemen. I'm sorry if I'm coming across as a pessimistic, but just go back and look at the bonds, man. Look at where the bonds were when the markets rallied. Yeah? Just do that. Simple action. And you'll understand why I'm going on about the bonds so much. Because then when you're sat down having a coffee with your friend and he's like, I think Bitcoin's going to go up to this point in the market. And you're like, why, bro? Oh, because Satoshi guy and, you know, Vitalik and, you know, on-chain analytics says that we had like several 100,000 addresses that have come into play. We're not having that many deposits in the exchanges. Yeah, baby. It's all happening inside of $1 trillion market cap. It goes in, market cap goes up, but stays in that $100 trillion mark. Sorry, $1 trillion mark. Then it comes back down again. So basically, excuse me, you're not really seeing new money coming in. But then when you're turning around and saying, yeah, but the bonds are dropping, my friend. He's like, well, why is that any relevance? And then you go into it. It makes more sense to that person to justify whether or not Bitcoin can move up or down. Now, I ain't talking Bitcoin from 27.9 to 20 to 48. All right? You understand what money needs to go into crypto for that? Yeah? We're getting close towards that 2.2 trillion, even $2.5 trillion market cap if Bitcoin were to roughly go to around 50, 60, well, 50K, for example. Where's that money coming from? Yeah? If the mood is not there for buying. Time your bets, ladies and gentlemen. These are fades in the marketplace. Bitcoin's moved up aggressively now. Gone above the daily open, okay? Looking across the board, I'm not really seeing the movement yet on the NASDAQ. I'll be getting over to that very shortly. But we have got a vector candle region all the way up here. Now, the problem that I've got is there volume in Bitcoin? Is there volume in cryptocurrency right now? So just looking at 20 past 2 in the afternoon or quarter past 8 in the morning Eastern Standard, we've had 201 million in longs open, 195, 11 on spot, 11 million, 10 million on spot again, 173, 173, 153, 136. So I haven't seen the billion yet. There isn't really anyone coming in with big capital or a collection of traders coming in to buy up Bitcoin. So we've got 3 figures. Okay, that's fine. 201 million. All right. 5-minute time frame. Does it look like a stop run? Could be a potential stop run. Okay. Now, if we go over to the dominance of the dollar itself, we understand a little bit here. Dollar is still trading sideways, okay? Euro, let's go back into it. Euro trading sideways yet again. Going into USDCAD, climbing down, moving down a little bit. So that would then make oil moving up a little bit. Not so much, but on its way, okay? We've got the NASDAQ getting ready to roll. And we've got the Japanese yen holding out. They're waiting for tomorrow's data, okay? Gold, just going to gold for a second. Gold takes a bit of a slump, breaks the range. Look for a little bit of a recovery on the red vector candle region right there. 50% of that zone would make sense. If gold keeps on going down, then assets against the dollar are naturally going to keep going down. All right, remember, gold, oil, commodities. Traders are now loading up, preparing for what's to come, okay? Now, with that being said, quickly go back into BTC, 67.67% up for the day. Let's go and have a look at the Bookmap, have a look at what's going on over there. No test to the VWAP. Ladies and gentlemen, the big move away from the start of the open in the marketplace is a bit of a problem for me. Bitcoin's moving up, and there's still 8 more minutes until the market actually opens. Look at all these sell orders coming in. So Hear me out. For anybody that might not be watching the screen but listening, 28,000, we've got 780 Bitcoin orders coming in. Adding it now, it just went to 787. No, actually, it's actually 833 Bitcoin orders at the 28,000 zone. Logic would say that that would then spark an interesting move up to bring it back down again. That's what we need to be cautious of. If this selling pressure up here is going to trigger Bitcoin to come in, to drop down and smack the VWAP at 27,720, then we would expect that zone at the VWAP to be an area of support for Bitcoin. Okay? That's what we're looking at. Look at the sell orders, man. There's big sales coming in here, and they keep placing the order, canceling it, placing it because they want to get filled. So the market naturally is going to fulfill this obligation. 800 Bitcoin orders, 28,000 needs to get taken. And then we look at the wall itself, we don't really see that much happening above that zone. But we've got a nasty little order down here at 27,660, which takes us to 655 Bitcoin orders. Why is this brother down here by himself? Now, it hasn't been cancelled yet. But why is there a big order down there when all the guys are looking to sell from this top right here? That tells me there's limit buys trying to protect this range in Bitcoin, okay? So now they're going to look to try and clear this 28,000 zone, which will be consistent with a stop run up. Green vector candle, here we go. Not taking the 28 yet. Green vector candle, red vector candle recovery region coming into play. If you guys remember back in the day on the live streams when we were spitting that fire, got this one vector candle zone right here, and the market itself isn't fully open just yet. So this could be a stop run. So if you're taking profits on this move to the upside, close as price is going up. What do investors do? What do guys who collect antiques do? They wait until their antique is of high value before they sell it. They don't buy it and then go to an antiques guy and say to him, yo, what's the value of this? He'll say, it's 5,000. Okay, I'll come back to you when it's 1,000. Doesn't make sense, does it? So why would that not make sense in the marketplace? Here is your asset. This is your antique. It's going up in value. If you're in a profit, take something. Don't worry, Bitcoin won't go to 40K from this one little move. And I stand to be corrected. If Bitcoin goes to 40K from this point, I'm done. Finished. Okay? That means doesn't stop. What if it actually does? What if I've just spoken into the future? Nah, surely not the bonds. Come on. They're not buying bonds. Why would they buy Bitcoin? Could be a hedge. I'm getting all messed up right now in my mind. My mind's having a party right now. 1 minute time frame deviation away from the 50 EMA. The fast move is the false move, ladies and gentlemen. Please be careful because I'm looking at Euro and she ain't doing much, okay? So if you guys are taking advantage of a nice play right here, how many of you are actually taking this play? Is anybody in the long right now? Because we need to see them hit 28. They have to hit 28. It must be taken. It might be taken across the board. Let me just go over here for a second on the futures markets. Let's roll that bad boy over. What have we got BTC doing right now? I've got an ultra wide. That's why this screen, that's why it all looks a bit dodgy right now on this screen. Here we go. So, oh God, what have you done here, Tina? Let me just have a look at the orders right now. Here we go. We got some, okay, so we got a lot of traders trapped in this area right now. Okay, there's lots of traps. There could be exhaustion coming into play. Maybe not so much because we've got agreement in the top side right here, which tells me that if the 28 hasn't been taken yet, no, 28 has not been taken. I need 28 to be taken to have more confidence in this move to see the reversal come back in just in time for the open of the marketplace. But we've got an imbalance zone down here, which in principle should be protecting this move up. Okay, so they could be adding to this area on Bitcoin to suggest a higher move. So we've got to be very careful with what's going on right now. Looking left, I want to just see over here. What have we got? I'm not seeing... Okay, we've got a little bit of a... not an imbalance zone, but not that much. It's a bit light on the order flow right there. Okay, there's the imbalance. Look at that. Huge imbalance, which will take us towards this red vector candle all the way at the top on the higher time frames. That would be towards this area right here. That's 28,200, okay? So if they can't take the 28 zone, that would be a very weak move to the upside, okay? That's what I'm looking at, okay? So just be mindful of that. Zoom out a second. Let's just go back into Bitcoin, have a look here. So he's got some traders trapped up here. Selling point of control was at the highest point of the candlestick itself. Delta's 19% at the highest point in the chart. So then that tells me, look, out of nowhere, 19%, it just stinks. You know, it stinks of a reversal point in the chart, but they haven't taken 28 yet. So I want to wait and see if they can actually do it. The only proof of them holding this point is this area right here. Okay, if they can hold this area, then we'll know that they're going to try and go for the 28. So you see this 990 right there. Those guys need to step in and start picking up. Aggressive buyers need to come in at this point, not aggressive sellers. We don't want 722 to increase. We want 992 to increase. We want it to go to 1,000. We want it at 3,000 if possible, because we want them to start picking up. Here we go, 1,000 right there. We want them to come in at this point to suggest higher prices. Look, man, they've just come back down again. They've hit those imbalances right there. I want 28, man. I will not be happy if 28 is not taken. Here we go. Come on. Give me your bets, ladies and gentlemen. Yay or nay, 28 or not. They clear 28. They'll be flushing the liquidity right here. Look, they'll be clearing that liquidity. Look, it's all stacking up. 811 Bitcoin at 27,900. 468 at 28,080. They need to keep the liquidity here, but we cannot dismiss the VWAP. Do not ignore the VWAP, okay? Don't ignore it. They could go for it, so just be careful. If you're in longs taking profits, or you've just taken a trade to ride the momentum higher, all right? Do not ignore the VWAP, okay? Come on, Bitcoin. We're in a vector candle recovery region right now. Let's go to the 1 minute time frame and have a look what's going on here. Remember the criteria, guys. So if you've got a move to the upside, you are looking for the first red vector candle to appear above the 50 EMA, okay? Look for it and then see if it's breaking into that 50 EMA. If you don't see that, the trend may be sustained to the upside, okay? Do you see the red vectors coming in yet? No. So it's like we're good to wait for our trade to flourish a little bit more. 28,000 is screaming up there. Let's go to the high block itself. Let me just go to this product zone, go to the liquidation levels itself. Market ain't even open and we got this flavor in Bitcoin. Here we go. Oh, retail's buying, ladies and gentlemen. Perfect time to reverse. Here we go. Perfect time. 19 million at the top side, 36 million at 27,954. And then we've just had another 14 million opened long at that point. Short sellers are coming in at 27,898. Wait until they hit 28. Do not do nothing until 28 is taken. The only way that you would invalidate the idea of 28 hitting is if a red vector candle appears inside of this zone. Wait for 28. Then we're going to get more information. Here we go. They're going to clear it. Come on, BTC. Come on, BTC. Here she goes. Blue vector candle. Always, whenever there is a vector candle, you will see, going back in the charts, you will see a vector candle breaking through 28, 29, 30, 31. You will always see a red or green vector candle breaking through whole and half number zones. Right now, we've got the 28 and we haven't had the break just yet. Sell orders are coming in. It's imbalanced to minus 33%. Sell imbalance. People want to sell right now. So there's naturally going to be a reaction from this. We would expect Bitcoin to sharply drop. As long as they can sustain above the moving averages on the smaller time frames, then we would say that is another way to load up longs to move out higher. Here we go. 28 is not taken just here we go, ladies and gentlemen. Vector candle. Vector candle. Turn, there we go, happy days. Just by looking at that, how do we know it's going to turn into a vector candle? The speed of the candle. Why? Because the vector candles are on the principle of price exchanging hands at speed. Who is doing that? Not retail, market maker. So now that 28 has been taken, we've got a little bit more information about the move to the upside. So now we're going to wait. This is now the trend. If we're going to be looking at taking advantage of shorts, don't do them just yet because the market is now open. So we need to wait for them to react to the unemployment data. So now we've got to sit tight. Euro's made another move up. So here we go. Wait for it. Here we go. 28 has been taken. All right. Now, this is where the proof of it comes. Look at all these orders now disappearing. Need to pay close attention to it because this is where they could just snap it down. 28 again. So they're back at the 28. So now you've got to pay attention. Remember, you're looking for the first red vector candle to appear above in this zone. That gives you the clue that they could be getting ready for something. All right? 5 and 13 EMA doing great. Trend is in play. Violet vector candle. Next candle should come up and recover it if the move is going to sustain itself for another wave to the upside. If this sell-off, there we go. So it does it. Now, We're seeing price trying to climb up a bit more. Remember, 28,080 was that point in the chart that we spoke about. Let me just go back into Bitcoin on EXO charts itself. Here we go. They've come up into our zones up here. Not taken that imbalance just yet. Where was it? It was all the way up there. Man, if they can do that, that'll be interesting. Here we go. Imbalance. Oh, look at this. There's exhaustion. Exhaustion has come into play. All right. So there's not any guys up there. That's not a good sign. I'm not liking that. We could start seeing the sell-off happening right now, guys. 1,200 on that zone right there. That's good news for us. They could snap down. They'll probably come down here to test it again, to test the true intention of traders at this point, okay? If they can hold it, happy days. Look, we've got imbalances here. 86978, 385, 221. Imbalance means look diagonally. So the 79.5 to 385, that's the imbalance. So it's about 250 to 300% imbalance, okay? Here we go. We're not seeing imbalances just yet, so keep an eye on the chart. We're still holding out above 28. That's good news. By the principle of count with the market maker, we have got 1, 2, 3. This is a big zone. Big zone right now. Go back into the time frame, 1 hour time frame, sharp move to the upside. It's only going to make sense it goes to that vector. It's the only thing that's keeping me committed to higher prices. We got 28 minutes until this candlestick finishes. It's already become a vector candle, okay? 28 minutes, right? Once this candle closes, right? Get your Fibonacci's. Take the highest point, go to the lowest point, and work out where the midpoint is of the vector candle. That would be your area of support if the move does decide to retrace continuation out, okay? That would be the logic. You just go over and have a look at what's going on elsewhere. Euro, doing nice, thank you. Pound, nice. USDCAD, coming down. Oil should be moving up. Gold, doing okay. Dixie, coming down. That's good news for us. Look, like I said, if they're preparing dollar for tomorrow, any move up, just make sure you're paying yourselves and getting some money off the table. They're going for the red vector, ladies and gentlemen. They're going for it. Come on, BTC. New 15-minute candle. Don't let go now. We've got the 28. The vectors come in. They're encouraging traders to step in right now. Here we go. More traders are going long. Let's have a look. Liquidation. 16 million at the top side of 28,000. 96 million at the 28,000 zone. This is what I'm saying, why we have to wait for the whole and half numbers, because that's where retail buys. That's where algorithms, market makers, you name it, players are exploiting the spread and selling. Now we're going to wait and see if they're finalizing it with it, because people are now witnessing Bitcoin going up. It's up 1% for the day, okay? Keep that in mind when you're trading. Here we go. Nice continuation. We would expect 1, 2, 3 hits to the high. 28,197 to recover that red vector candle, ladies and gentlemen. I think Bitcoin will do it once I finish the live. If you are new to the channel, mad love and respect. Giving you some flavor into how I'm looking at these mad old charts. Remember, we haven't tested the VWAP, so take profits where necessary. Look for the first red vector candle that breaks from the top side of the moving averages, a 5 and 13 EMA. Keep an eye on that bad boy, and as long as price can sustain itself in that area, we are good for higher prices. But remember, market maker is selling right now. He's not buying. You are. Hopefully not, because you guys understand the name of the game. But we've got a vector candle recovery. Remember, we just had $96 million worth of longs opened. That means traders are itching to buy. Be the antiques guy that sells at the highest point. Mad love and respect. Peace.